Good morning, everyone. It is now 6:08 a.m. Pacific Standard Time, 11/7 of 2012. Before us, I have a gap open down list on the NYSE, where 50% of your trades are done with program trading. I will tell you that President Obama has been reelected. When I go through this list right here, you look at this gap down list now. This thing is going forever. And it starts up here, AGU, some of these ag stocks, CF that just reported earnings, CEO, some of the big ones, Goldman, Cummins, BTU Energy, EOG, CRM, Petro. I can go on and on. What we look at on this president-elect morning, the reaction is what we can see in the pre-market futures. We haven't seen a gap down list like this deep and this long, for several months. Lots of fund managers, hedge fund managers, they're going to be reallocating. They are going to set up. You can see the disappointment. The stocks that were bid up ahead of the election that would have favored Romney, people are going to sell and unwind them. The thing about it is, the talk that we have is fiscal cliff. 2013 will have lower growth rate as it stands under the current environment. The perception of people out here from the last 4-year period that are in the bigger Wall Street community obviously are not happy. Because if they were happy, you wouldn't see this. You would not. Now, I'm not going to debate whether this Obama does the right thing moving forward or not and what it would take to grow this economy. Maybe he does, maybe he doesn't. But we do have a plan for this. And moving forward, this calendar year, ending out 2012, we definitely have a plan. The volatility is going to increase. I want people to be aware of one thing. I want people to be aware that in the trade management, we will look for the quality. Stocks will be in trading ranges. This is the knee-jerk reaction the morning after. This is the gap open down list in the NYSE, and it is a mile long, and it is here now. And we have all of these recorded. We will go in here and find the ones that we like. We will see what ends up happening. This is the reaction. Now, if there's any talk about any statements coming out of the White House about the White House wanting to move over, and where these Republicans and Democrats start working for the people and get out of themselves, that's what you elected the guy for. Obviously, hopefully, now that you have cast your vote, if you did vote, you can see where part of the groups around the world are disappointed when it comes to financial markets. If they were happy with that nomination, the Dow Jones futures are down 131, 132 handles and just keep going down. NASDAQ futures are down 30 handles. S&P 500 futures on this election day is down 15 handles. We haven't seen anything like that in a number of months. And the thing about it is, the volatility is going to increase. If we break below key support levels in the indexes, that means that bull rally that we had throughout the summertime becomes less bull and less bull and less bull. We will be updating the network of peoples as to what will happen. And we will go look for the deals that are on sale. And once again, this is the knee-jerk reaction to the NYSE, to Wall Street fund managers, hedge fund managers. This is their reaction. Now, the good news is if they come back to the table and they do the right thing for the American public, because the American public elected this man, and the thing about it is, hopefully he can do his job correctly. And if he doesn't, and we get the same kind of 4 years and the gridlocks about fiscal cliff and what needs to be done, I would be writing your congressman. It's going to be a bloodbath for some of the bulls in the short term. Basically, what we will do is pick up the deals as we find them. But once again, this is your knee-jerk reaction right here in the NYSE. And the gap down list just keeps going and going and going and going. Anything with $1 ratio or higher, which we start way down here, and this list just keeps going and going. I have not seen a gap open down list like this in many, 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 many months. And the last time that we seen these kind of gap down lists was when we were putting in those bear bottoms in calendar 2011, and that was 1 year ago right now. It was 1 year ago right now. So basically you can see the turmoil from the election and the response clearly. I would, if I were you, if you are an innocent individual and you're holding stocks, I would be very careful moving forward in 2013. We don't know what these people are going to do. We don't know if they're going to change policy yet. All of that is up in the air. But right now, everybody has it figured this way, that it's still going to be the same way that it was in the last 4 years. And so that's the reaction. And we know that a lot of times in these kind of cases, when these kind of events are very emotional for hedge fund managers. And the Dow futures continue to go down. They're down now, 137 handles. We are going to open the opening bell in 15 minutes. This has been recorded for the MMTs and new MMTs that are coming here, and any other people's. Beware. It's going to be very interesting moving forward. Gap open down NYSE, and the list is longer than long.